Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is FOMC. Got about 10 minutes. By the way, I changed some of my encoding settings. So if you have any kind of issues like buffering, doesn't look right, whatever the deal is, let me know. So I did change my OBS settings a little bit here today. Anyways, some interesting things have happened since we spoke this morning, haven't they? We'll come back over to the charts here, man. Oh, my. Good morning, or good afternoon, Winston. So we come back to the ES here. Well, it's not really significant, relatively speaking, but we did have a bit of a sell-off here. So we had a bit of a sell-off in the E-mini. We're kind of detecting hints of it before we left, but then since we've left, it really... they really puked. The treasuries, they've been difficult. They've for sure been difficult, but they are slightly tilted to the downside. Oil doing really well today. Goldman is just like super bullish on commodities and oil in particular right now, so that's helping them. Gold, gold was a little weak, but I guess it's doing okay. The dollar took a big hit earlier, right? Dollar took a big hit earlier. Okay. Kappa about where it was. So that's what we got. You can see here the dollar just got crushed, but the euro just like took off. So and you can kind of see here on this chart a little bit better idea of how things went. So it wasn't like it wasn't like the end of the world, but we did lose all of the gains that we got from the early morning. Your avatar's hair doesn't seem to be loading, but otherwise loud and clear. What are you talking about? Oh, I see what you mean. It was a joke. I get that. Oh, man. I've been waiting for somebody to make fun of Steve for not having hair. Because part of the joke is that Steve is very conscious about not having hair. Right? So he's supposed to be the opposite of everything, right? Also, you know what was super interesting while we were gone too, by the way, like everybody watching us on replay, we want to hear about the Federal Reserve. Seth starts going into garlic coin. Dude, so somebody was selling and they went on the subreddit and posted and showed that they had sold $1 million or a million garlic coins. For real. So I was able to use that to calculate market impact. So I'm pretty happy. There was $1 million. That's like $200,000 in profits that he took. I'm really surprised the market could take a beating like that. The garlic coin market could take a beating like that. So I'm super stoked about it. Let's make sure that we got financial juices all up and going, and then we got the Twitter is going good. And let's see here. I don't know if we can do the text to speech or not. We'll probably get a little bit of time. We'll see. See if it loads up here. Yeah, it's probably going to be pretty sparse for the FOMC meeting, but maybe I shouldn't call it FOMC. Maybe I should call it Federal Reserve. Federal Reserve interest rate decision. Now we'll get all of these people that hate the Federal Reserve come in, probably. See, and here we got this lovely emoji. Do you see that? You see that emoji? Yeah. This is what the time that emoji has been made for. When the Federal Reserve printing the money, that's what it's there for. So you make use of it. Henry David Thoreau. If he spends his days as speculator shearing off those woods and making the earth bald before her time, he is deemed an industrious and enterprising citizen. Oh, okay. I'm not exactly sure what that's supposed to mean, but I would be happy to be deemed an industrious and enterprising citizen. Yes, that'd be lovely. Man, are you coming back and looking at all this? Everything is down. Have you noticed Bitcoin tends to be on the same side of this as all of the equity indexes? Seems to me. Why is somebody posting a picture of Dawn of War stuff? That was a good game. I enjoyed that game, Dawn of War. It's good stuff. It's good stuff. Senator Manchin, we want to find how we're going to pay for it if we are going to be able to be competitive and be able to pay for what we need in the country. So did you see Joe Biden's plan for, he wants to have all of this stuff for families, essentially. So it's kind of, it's a plan that I would think you could bludgeon conservatives and Republicans with, Oh, you don't support families? Why don't you support families? But like, it super bothers me because it's like, okay, you're going to give me more money. I don't necessarily think that I need more money. You're going to raise everybody's taxes. You're not going to do anything about the debt. Like seriously, if you're going to raise my taxes, you better be reducing that deficit, not be adding more spending on it. This just the whole thing it kind of makes me upset. That was going around yesterday, and I don't really see people saying that. Like, guys, what about the deficit though? Like, that's great. You're adding all of this stuff. So you're going to add all of these, you're going to do all of the tax the rich stuff that we're all concerned about could hurt the economy, and add all of this spending, and then the deficit is still going to be bad. So how are you going to pay for the deficit? Because I think we all know what's going to happen, right? They're going to tax us more. They're going to tax the middle class, and we're going to have to pay for it. SEC pushes its long-awaited decision on whether to approve a Bitcoin ETF until June. Yeah. Not surprised. Oh my gosh, did Jay finally take one? Well. Okay, we got 3 minutes going on here. The market liquidity, at least in the treasury, is looking pretty light. 2 minutes. $40 till nothing happens. It's funny because this rate decision is not expected to be significant at all. Now, did he really get stopped? But then he took it again? What? Wait, what? Okay. So I think Jay should be turned off for this. The liquidity all coming out. We don't want him to be trading that. No. Can turn it back on 5 minutes afterwards. Okay, going 1 minute into it, the liquidity is definitely all pulled in the treasury in the 10-year. It's not terrible, actually. I've seen, it used to be that, man, if FOMC was coming, you would see 100 on there. So, not too bad. Somebody trying to sell there on the E-mini. I don't know. We're not expecting anything big, but I kind of suspect that, if anything did happen, I think it would be bad. And the market seems to be hedging for that for some reason. So, okay. So there's the release. Fed inflation has risen, largely reflecting transitory factors. Economic activity and employment have strengthened. Rates left unchanged, no change. Overall, financial trends are always favorable. The E-mini, the dollar is rising here. The dollar is rising big time. All of those gains that the euro made earlier, and both the euro and the Japanese yen are both getting creamed here. We are getting a little bit of a trace back. The equities initially rose and then fell back down. And you can see Gabby just she probably shouldn't be trading this either. But you know what? We're going to let her do it anyways because she made the right call. We're going to let her do it anyways. We'll turn Jay back on in a few minutes. Okay, so we're going to have the press conference down at the bottom of the hour. Where is the little red? Oh, here we go. Statement comparison. Open image in new tab. So, not much changed. They changed following a moderation in the pace of the recovery and changed it to amid progress on vaccinations and strong policy support. Indications of economic activity and employment have strengthened. And then they said inflation continues to run 2%. They say sectors most adversely affected by the pandemic remain weak but have shown improvement. Inflation has risen, largely reflecting transitory factors. And that is the majority of the changes. So that was basically what people were expecting. We got a pretty good move down, though. I don't know. Now the E-mini is moving up. Continuing up, in fact. I think I could buy that. Yeah. The dollar all over the place. My, oh my, is the dollar going to get creamed here? The vote was unanimous, by the way. Where is this one? Fed can keep buying bonds until there is significant improvement. I didn't see that in the statement, so I don't know where they're getting that one from. $10K at 26.5. What? 12K? What? Okay. So that was no good. Oops. Just fix my little boo-boo right there. Okay, cool. It's coming back. So I'm hearing stuff come over the news wire that was not in the statement, so I don't know where it's coming from. Hmm. So this one over here in the 10-year, obviously it came back on me big. I'm not really paying attention to that, so. This is that one, even if I got like that, I'd be happy. Kind of wondering, though. I suppose that them getting a little gap down and then saying, okay, we got our trade, take it off now, and buying up as they take their trade off makes sense. When you look at it, you realize we were right here at 27.5 for them to come down that far and then just retrace is kind of interesting. Because I didn't really see any reason for it to move. Maybe I'm reading too much into some things, right? Like I'm looking at this and I'm like, well, why is the market moving this and this? But then it's actually like, there's no reason for it to move. So maybe this isn't really it moving. Maybe it's just, traders trading. Okay, well, we can turn J back on. It's been more than enough time. Yeah, he would have taken a bad trade there. So I'm glad we turned him off. Zero Hedge posted a picture of Powell at his desk checking market prices before the meeting, and he's looking at the price of Bitcoin. Bitcoin didn't really move out of that at all, did it? No. They're still slightly down today. And the equity index is still slightly down today. That's freaking hilarious, man. Bitcoin 55K on quote unquote transitory inflation. That is not why Bitcoin is where it is, you retards. That was Zero Hedge tweeting that again. Nah, Bitcoin is not. I don't think it's come up from, well, if you're saying that, then you're admitting that Bitcoin is in a bubble to some extent, aren't you? You're saying that there's demand in there that wouldn't naturally be there unless people were afraid about the dollar falling. Nah. I don't know. It's kind of funny. What did people expect them to say, right? Nothing changed in the statement. I guess they just noted that the inflation is transitory, which means that the inflation will be homeless. So please, if you can contribute, make sure that this homeless inflation finds a home. I know we were talking about the homeless a little bit earlier today, so you guys kind of understand some of the challenges around those issues. So please, help with the transitory inflation. Kruger finally had a steak at decent. Oh, yeah. I want a nice steak. Now you're making me think I want a homeless inflation lives matter. Yeah. Well, the E-mini here is a little. I don't know what to think of this here. What it's doing. So I do think that in the E-mini this could still be a buy, but it looks like they just kind of got stuck in a low liquidity area. Like look at the inside bid and offer. Right? Like they're trading a dozen at a time and having a very difficult time getting anywhere. Faraj Patel saying presser likely more interesting. Yes, very. Press are more difficult to trade though, because he keeps talking and you don't know when he's gonna say something dumb, or if the market is gonna overreact to something that he says. So here's a genuine question. We know when a public figure or company has sold or bought stocks, but why should we have to wait on a company or figure's discretion when it comes to revealing crypto or Bitcoin purchases/sells? Like, imagine if we had learned about Tesla selling Bitcoin during the sell-off, or right at the top. Wouldn't that be more fair? That way investors can sense out a dip or buy based on the move. And I don't think that that's why you buy or sell it, Catherine. That's the lady that does Kramer's show on the street. Okay, that's good. So we get a little bump in the road here at 80 or so that we kind of got to worry about. Okay, some buying coming in and shoving them up now. Slight rise in cumulative delta. Treasury coming back up there again a little bit. Hard for me to tell which one is driving it. Treasuries and equities all kind of moving in tandem, and the dollar turning down. Maybe, well, I don't know, that last move. Yeah, it does look like that last move is the dollar. It looks like the dollar and the treasuries are moving opposite each other. Well, a decent amount of volume right there in that spot, but you see how it's kind of going? Okay. So it looked like that time it was much more about the 10-year. Man, is my ZB feed okay? It is changing. But, like, what the heck? What's going on in the 30? Curve, the 30-year section of the curve, like, doesn't care. That's incredibly odd. Okay. So this particular move kind of looks more in line what I'd expect. Guess I should pull up my YouTube window, huh? The Federal Reserve. Doom, boom, boom, boom. Oh, am I making my table making me shaking the table causing weird noises in the microphone? Under 82 flat ES? Saying you need to get above that open, yeah? They need to get above that open. And they kind of shying away from it. You can see the distribution right there between 80, 81 and 80 and 79, right? A little double hump shape. You didn't notice any noise? I could see it in the meter. So my leg was shaking. No, so I'm seeing some people on Twitter being like, this is boring, nothing happened, but I'm looking at it like they moved way more than they should have. They moved way more than they should have. Oh, look, I've been selected to win a scam in Discord. Yeah, banned. Yeah, you're banned. Okay. A little bit of order book movement there. I think that might have been at the Treasury. All right, so there's the open. They got over it. They did it. You see, Vlad, we just needed to have faith. We just needed to hope and pray. Right? Effective strategy right there. Hope and pray. No. They are above the open. They use the same songs for the background music on the Federal Reserve Channel. See, this song though is pretty good. I like this one. You can't hear it, but I think it's pretty good. Well, and they lost it again. I mean, it was looking good there, and then this is one of those ones that might be like a real slow drift up to the high, and then when it gets there, it just takes off. But I don't know if that's really what's going to happen. And it's just kind of like that's the potential setup, right? Overall, it kind of looks to me like people were hedging for this Federal Reserve just in case, and nothing happens, so they have to unwind it right now. But over here in the treasuries, they're still waiting because maybe Powell's going to say something more. Zero hedge is like really on this inflation. Chairman Powell trying to explain how the Fed knows inflation will be transitory. That's what they're tweeting out. I'm like, give them a chance. Good grief. It's propaganda over there is what that is, man. Like that is not a reasoned analysis of the empirical evidence or an insightful commentary. It's just, I don't like the Federal Reserve and I'm going to try and bash them any chance I get. I like that account, but sometimes that account meaning the Zero Hedge Twitter account. Well, do you think that the market liquidity is healed yet? Market is afraid to move without market participants? Could be. Well, at this point, we kind of have to wonder why the E-mini was bearish earlier, right? Because it could just be like, this is a non-event, but now they're still bearish, maybe something like that. Bullard may have been the canary in the coal mine on the 75%. I hope they ask him about that. Actually, I don't hope. I mean, it'll be fun, but it won't be a good thing for us if he says something about it. Chinese investors are in talks to buy a stake from Saudi Aramco? Main event is Apple after hours? Yeah. Given the way that Microsoft and Google turned out yesterday, really makes you wonder, too, how the Apple one's going to turn out, right? Because it looks to me like in the current environment that you just have to absolutely kill it for earnings in order for you to not take a hit. But I mean, they're being a lot more discerning. Like with Tesla, for instance, they sold Tesla because there was like, oh, you only made the money from selling Bitcoin and your regulatory credits. Oh, okay. But that was basically the case last earnings too, right? And they were fine. They're demanding, like, if you come out and it's not like growth is going to be good and all of these things, then they leaving you for dead, because the growth expectations that are being priced in here are, really demanding. Okay, so here he comes.
Congress has given us maximum employment and price stability. Today, my colleagues on the FOMC and I kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. Widespread vaccinations, along with unprecedented fiscal policy actions, are also providing strong support to the recovery. Since the beginning of the year, indicators of economic activity and employment have strengthened. Household spending on goods has risen robustly. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also increased. Spending on services has also picked up, including at restaurants and bars. More generally, the sectors of the economy most adversely affected by the pandemic remain.
Powell says the recovery remains uneven and remains
While the
incomplete.
recovery has progressed
Let's turn you off.
generally expected, it remains uneven and far from complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since March, progress on vaccinations has limited the number of new cases, hospitalizations, and deaths. While the level of new cases remains concerning, especially as it reflects the spread of more infectious strains of the virus, continued vaccinations should allow for a return to more normal economic conditions later this year. In the meantime, continued observance of public health and safety guidance will help us reach that goal as soon as possible. As with overall economic activity, conditions
Okay.
have continued.
So he was talking about
Employment rose
the thing,
19,000 in March as the leisure and hospitality sector.
basically, that as we recover from the virus, that they might be able to withdraw their support. But so there's a little bit of a push there.
Pandemic. For the economy as a whole, payroll employment is 8.4 million, below its.
I don't think they were reacting to what he was saying there so much as what he might have was. And they were more concerned about what he was maybe going to say than what he actually said.
As participation in the
Mind turning it up a little bit? Is he too quiet?
levels. The economic downturn has not
How about that?
fallen on all Americans, and those least able to shoulder the burden have been the hardest hit.
It's the
High level of job
it's the chairman talking, Big Toasty.
for lower
What happening?
workers in the
Or is that just saying hi? How are you?
African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. Readings on inflation have increased and are likely to rise somewhat further before moderating.
Okay, here we go.
In the near term, 12-month measures of PCE inflation are expected to move above 2% as the very low readings from early in the pandemic fall out of the calculation and past increases in oil prices pass through to consumer energy prices. Beyond these effects, we are also likely to see upward pressure on prices from the rebound in spending as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transitory effects on inflation. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable.
Okay. Well, that was the one of the key points, but he didn't say anything new. He stuck to the script.
As we say in our statement on longer-run goals and monetary policy strategy,
Certainly, though, they're going to push him hard on that when the Q&A section comes, right?
our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved.
Okay.
With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time.
Okay. That's all I can take on the Treasury trade.
Above 2% this year would not meet this standard. In addition, we will continue
That's okay, though. We made money on it.
of Treasury securities by at least $80 billion per month and of agency mortgage
It was an experiment anyways.
$40 billion per month until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since March 2020 has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our goals, and it is likely to take some time for substantial further progress to be achieved.
Ouch.
Guidance for interest rates and asset purchases
Very well.
path of the federal funds rate and the size of the balance sheet to our employment and inflation goals. This outcome-based guidance will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery. Thank you. I'll look forward to your questions.
Thank you, Mr. Chair. First, we'll go to Paul Kiernan.
Cool.
Hi.
Look at that.
Val, thanks for doing this. I guess since I'm first, I'll go ahead and re-up Howard's question from the last press conference. Is it time to start talking about tapering yet? Have you and your colleagues to this effect? Thanks.
Thank you. So, no, it is not time yet. We've said that we would let the public know when it is time to have that conversation, and we said we'd do that well in advance of any actual decision to taper our asset purchases, and we will do so. In the meantime,
Thank you.
monitoring progress toward our goals. We first articulated this
Well, they like that.
for the progress test.
They like that.
Economic activity and hiring.
Hey, guys, party's extended 3 more months. Let's do it.
And it will take some time before we see substantial further progress.
Huh?
Thank you.
Thank you. Jonelle at Reuters.
Okay, hi, thank you so much. My question is about
Ba-boom.
what's going on with the virus, and what if we don't reach a level of herd immunity per se? So
See there, that was 1, 2, 3, 4, 5 winners and 1 loser just there in that 5 minutes.
policy, even if there's
This is good practice.
infection still going on, or how can you talk about how
I'm still a little weary about this trade. Like, I don't think I'm very good at it, but that was pretty good
About herd immunity,
right there.
It looks like to the health experts, but I would certainly say that what matters the most to the economic recovery continues to be controlling the virus. The economy can't fully recover until people.
He's refusing to call a specific herd immunity amount.
labor force who won't come back in.
That's interesting.
They feel really comfortable going back to their old jobs, for example, and there may be parts of the economy that will
No, that one's no good.
to really fully re-engage until
Oh, phew.
the pandemic is
Phew.
behind us.
Listen, whoever that 2,500 lot was that came in behind me, thank you, sir.
For tapering our asset purchases. And
I'm having a little bit too much fun. I should stop.
so for asset purchases, we've said that we would continue at the current pace of asset purchases until we see substantial further progress toward our goals. So, and that is what it is, substantial further progress. For interest rates, as I said a moment ago, we want to see labor market conditions consistent with maximum employment. We want to see inflation at 2%, and we want to see it on track to exceed.
So I continue to see the 10-year lag a little bit. So that's how I'm.
The virus.
It's a big iceberg right there, though. I want to stay away from that.
The path of the virus is going to have an effect on our ability to achieve both of those tests.
Great. Thank you. Gina.
Hi, Chair Powell. Thanks for taking our questions. I wonder if you could talk a little bit about that test for raising interest rates that you just elaborated. You've obviously made it very clear that you want to see improvements in the real economy, in the real data, and not in just sort of expectations data before making that move. But I guess I wonder what happens.
Dollar getting crushed there.
If you were to move up before you see some sort of return to.
So this is new lows on the week for the dollar.
Sort of the stability in inflation has been
90.56
stable, and I guess I wonder how your reaction would be, or sort of how your reaction to that is how you're thinking about that.
Right. So it seems unlikely, frankly, that we would see inflation moving up in a persistent way that would actually move inflation expectations up while there was still significant slack in the labor market. I won't say that it's impossible, but it seems unlikely. It's much more likely that we would, having achieved maximum employment conditions, we'd also be seeing 2% inflation and be on track to see inflation moving above 2%. They tend to move together. So that's not to say inflation might not move up, but
that's the one disappointing
way that really starts to move inflation expectations up. That would take some time. And you would think that it would be quite likely that we'd be in very strong labor markets for that to be happening. If that actually were to happen, though, there's a paragraph in the statement on longer run goals and monetary policy strategy which says that when the two goals are somewhat in conflict, we weigh various factors, including the time it would take to get back and forth. So we do. It doesn't really tell you what to do, but it tells you that we will weigh those two factors and how far we
look at them go.
Reach them. Were we to reach that sort of pretty unlikely state.
Well, we're at new highs in the S&P 500, so where we go from here, nobody knows.
I wonder if you can help us understand better your thinking about how COVID infection rates and the virus calibrate with monetary policy. As you recall, we had a major resurgence in the virus last year.
Yes, please re-ask that again.
Would you need to be assured that there wasn't such a resurgence coming before you began, I mean, for lack of a better term, thinking about tapering? And what kind of comfort level would you need? Would it be something that would be declared from the CDC or the World Health Organization, for example, downgrading the virus from a pandemic before you had the comfort level to reverse course on policy? Thank you.
Yeah, we really have just articulated the goals that I've just mentioned a couple of times, which is substantial further progress toward our goals before we taper. Now, that's very likely for us to achieve that. It's very likely going to be the case that we've also made the virus.
So he wants to see that inflation, and he's saying obviously the virus
articulated a separate test
going better
state of the virus
will help with the inflation, but
because we're not,
that's not what they look at
in that area. We're really focused on the economic outcomes, and again, my guess is that it's very likely, it seems to me, that for us to achieve the economic outcomes, we would need to taper or to raise interest rates. We would.
By the way, gold and silver taking off here
in getting the virus under control. Not necessarily fully under control. There is a possibility, of course, that
with rates taking, with the rates coming down, that should be good for silver and gold, right?
And potentially next winter as well. But we'll be looking for substantial progress toward our goals, substantial further progress toward our goals as we think about tapering asset purchases.
The dollar, they killed him.
Hi, Chair Powell. I wanted to
Devalue the dollar and make our debt worthless?
about the need to have a lot of help from fiscal policy and monetary policy to make sure that there's not long-term scarring in the economy. And I was just wondering, given all the policies that have been put in place, do you expect there to still be some long-term scarring? And if so, what are you most worried about? Where are you most worried about that showing up?
So I would say that we were very worried about scarring, both in the labor market from people being out of the labor market for an extended period of time. The evidence is clear that it becomes much more difficult if you're out for a long time to get back in and get back to the life that you had. Same thing with these small businesses, many of which are the work of generations. Were we going to wipe out many of those unnecessarily? That was a big concern. I would say that so far, here we are in late April of 2021, we haven't experienced that level of scarring either in the labor.
Oh, did I lose on that one? Yeah.
So we're not living that downside case that
I think I still want to buy it though.
Notwithstanding that, we're a long way from
very difficult when you're incentivizing people to stay out of it.
2020. We've got a long ways to go, and also, it's going to be a different economy. So we've been hearing a lot from companies that they've been looking at deploying better technology and perhaps fewer people, including in some of the service industries that have been employing a lot of people.
No, not that one.
It may well be. It seems quite likely that a number of the people who had those service sector jobs will struggle to find the same job and may need time to find work and get back to the working life they had. These were people who were working in February of 2020. They clearly want to work. So those people are going to need help.
Good.
And so while I would say we haven't seen really highly elevated levels of unemployment for up in the teens that we thought.
I feel like I'm getting the hang of this.
We've still got a lot of people who are out of work. We want to get them back to work as quickly as possible, and that's really one of the things.
That was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions.
9 for 12.
The market in many American cities is seeing booming prices, bidding wars, and all cash offers.
No scratches. Probably some of these could have been scratches.
At the same time that housing is becoming much more expensive for lower income Americans.
Oh, of course, 75%.
From the pandemic.
75 is our target.
Concerns that there are localized housing bubbles or that there's the potential for that.
Shut off the UBI experiment and watch the labor market explode. Yeah, I agree with you, man. If people aren't getting jobs, it's because they don't want to.
Very carefully, of course. And I would say that before the pandemic...
Maybe that's like an incredibly naive ivory tower opinion, but it seems to me that if you want a job right now, you can find one, even if it's like working at McDonald's.
In addition, most people who got mortgages were people with...
Companies are paying people here just to show up to interviews, yeah? McDonald's paying $50
practices were not
just for you to show up to the interview.
Where we have a housing bubble where
I want to buy that.
Over-levered and owning a lot of houses. There's no question, though, that housing prices are going up, and so we're watching that carefully. It's partly because there's clearly strong demand, and there's just not a lot of supply right now. So builders are struggling to keep up with the demand. Clearly, inventories are tremendously low. We're all hearing those stories. And if you're an entry-level housing buyer, this is a problem because it just is going to be that much harder for people to get that first house, and that's a problem. I mean, it's part of a strong economy with people having money to spend and wanting to invest in housing. It's good. It's clearly the strongest housing market that we've seen since the global financial crisis. And, my hope would be that over time, housing builders can react to this demand and come up with more supply, and workers will come back to work in that industry. So, it's not an unalloyed good to have prices going up this much, and we're watching it very carefully. I don't see the kind of financial stability concerns, though, that really do reside around the housing sector. So many of the financial crack-ups in all countries, all Western countries that have happened in the last 30 years.
So look at this.
We really don't.
5-year.
We don't see bad loans and unsustainable prices and that kind of thing.
So why aren't they hitting that?
Chris Rugaber, Associated Press.
Hi, thank you for taking my question. I wanted to ask about the labor market. Do you see things such as in the beige book?
They definitely steepened, except for on the 2 and 10. The 2 and 10 flattened. Uh-oh, his internet went out.
Market for fear of getting sick, child care concerns, and so forth. Do you see these as also just sort of temporary?
Look at that. Look at 29.5 in the 5-year. That's a big old order.
Thinking about these kinds of issues.
Chris, you were breaking up a little there, but I think I did get your question. So, yeah, I think there are a number of things going on there. The tension between a high level of unemployment and yet many companies saying they can't find, an elevated number of companies saying that they can't find workers. So what's really going on there? It should be a number of different things. There are workers who don't actually have the specific skills that the employers are looking for. There may be geographical differences.
There's huge housing demand because people groups are hedging inflation.
Factor would be schools aren't open yet, so there's still people who are at home taking care of their children and would like to be back in the workforce. But
this filter is stuck and he returns as a cat. That would be hilarious.
Viruses that are weighing on people, so some people don't want to go back to work.
If somebody made it, oh man, I was so glad that I did that. Did you see what happened in the 10-year? So I had my one ticker in there at 0.2. It didn't immediately go. It ticked against me a little bit, so I scratched it, and now they're down 3 ticks.
In the rearview mirror, in the history books, if you will. So, but clearly there's something going on out there as many companies are reporting labor shortages. We don't see wages moving up yet, and presumably we would see that in a real, in a really tight labor market, and we may well start to see that. I do think, so what will happen, what we saw during the last expansion, and it may be a different expansion, we don't know, but what we saw was that labor supply generally showed up. In other words, if you were worried about running out of workers, it seemed like we never did. The labor force participation held up. People came in the labor force. They stayed in the labor force longer than expected. So my guess would be that you will see people coming back into the labor force, and these jobs will be, the labor market will reach equilibrium. Maybe pay will go up, but I do think that, and I do think also the unemployment insurance benefits will run out in September. So to the extent that's a factor, which is not clear, it will no longer be a factor fairly soon. So my guess is that we'll come back to this economy where we have, equilibrium between labor supply and labor demand. It may take some months, though.
Thank you. Heather Scott.
Can I do a quick follow, or?
I'm sorry, go ahead. Go ahead, Chris.
Damn it, Chris. Can I get, okay, go ahead, Chris, and then look what happens. You see him right there? That's him right there.
Chris, let's go on to Heather.
That's what happened, Chris. Oh, you're gone. You missed your chance. Oh.
Of course, these concerns raised by Larry Summers and others about inflation. And the fact
he's going to have a talking to his ISP later today, right?
Policy stance.
I bet you he's using Wi-Fi. Listen, journalists, don't do a press conference like that with Wi-Fi. Use a wire, Cat 6 cables, my friend.
Get ahead.
Okay, that's good.
And make sure it doesn't go too far above the 2% target.
Your question. So I actually have a couple of things I'd like to say about inflation, including addressing your question.
Oh, he has a few things he would like to say about it.
Committed to achieving our objectives of maximum permanent employment and price stability.
Very strongly committed.
Our price stability goal is 2% inflation over the longer run, and we believe that having inflation...
Like he expected this question, and he has it written down what he's going to say.
2%. With inflation having run persistently below 2% for some time, the committee seeks inflation moderately above inflation for above 2% for some time. So with a little bit of context, we're making our way through an unprecedented series of events, really, in which a synchronized global shutdown is now giving way to widespread reopening of economies many places around the world. In the United States,
can't trade while he still talks. Yeah.
Strong support. Vaccinations are now widespread, and the economy is beginning to move ahead with real momentum. During this time of reopening, we are likely to see some upward pressure on prices, and I'll discuss why. But those pressures are likely to be temporary as they are associated with the reopening process. And an episode of one-time price increases as the economy reopens is not the same thing as, and is not likely to lead to, persistently higher year-over-year inflation.
Probably has an iPad nearby with a stock chart.
Not consistent with our goal of 2% inflation over time. Indeed, it is the Fed's job to make sure that that does not happen. If, contrary to expectations, inflation were to move persistently and materially above 2% in a manner that threatened to move in longer-term inflation expectations materially above 2%, we would use our tools to bring inflation and expectations down to mandate consistent levels. And I would say, if I may, that is a principal difference from, we're all very familiar at the Fed with the history of the 1960s and 70s, of course. And we know that our job is to achieve 2% inflation over time. We're committed to that, and we will use our tools to do that. So that's a very different situation than you had back in the 1960s. There are many, many differences, actually. Let me talk quickly about the two reasons, two or you could say three, but really two main reasons.
So they are kind of trying to retrace on that, but
the base effects. 12-month measures of inflation are likely to move well above 2% over the next few months as the very low inflation readings recorded in March and April of last year drop out of the calculation. That process has already started to show up. You saw it in the March CPI reading, and you'll see it later this week in the PCE price data. These base effects will contribute about 1 percentage point to headline inflation and about 0.7 of a percentage point to core inflation in April and May. So significant increases, and they'll disappear over the following months, and they'll be transitory. They carry no implication for the rate of inflation in later periods. So that's base effects. The other big one I would talk about is bottlenecks. So this is what we're seeing in supply chains in various industries, and we're in close touch with all of these industries. You know, the Fed has a network of contacts.
I think Jay's taking too many trades now.
Businesses and in nonprofits, for that matter, too. So what do we mean by a bottleneck?
He was going along. That's good.
Blockage or restriction in the supply chain for a particular good or goods, something that slows down the process of producing goods and delivering them to the market. We think of bottlenecks as things that in their nature will be resolved as workers and businesses adapt, and we think of them as not calling for a change in monetary policy since they're temporary and expected to resolve themselves. We know that the base effects will disappear in a few months. It's much harder to predict with confidence the amount of time it will take to resolve the bottlenecks, or for that matter, the temporary effects that they will have on prices in the meantime. So, I'll just sum up and say we understand our job, we will do our job, and we are focused, as you've seen, for many years, we've been focused on inflation deviating.
I'm going to let him finish. I'm going to let you finish.
Our tools aggressively to keep it back up at 2%. If we see inflation moving materially above 2% in a persistent way that risks inflation expectations drifting up, then we will use our tools to guide inflation and expectations back down to 2%. No one should doubt that we will do that. This is not what we expect, but no one should doubt that in the event we would be prepared to use our tools.
Yeah.
The issue is that I don't think that anybody out there that is concerned about inflation thinks that the inflation is being caused by just those bottlenecks, right? They think that it's being caused by the dollar becoming so weak.
You said a few weeks ago that it would take a string of months of job creation of about 1 million.
But on the other hand, I think he's right. I do think these are like temporary bottlenecks. It's just like you get the bottleneck and then everything on top of that. What does it all add up to?
Inflation. The FOMC said the rise in inflation we're beginning to see largely reflects transitory factors, as you just described. But why use the word largely? And what are the factors driving higher prices that may not be transitory based on the initial data that you're seeing?
So what is a string? What did I mean by a string? Well, I would say what we have right now is one really good. I can tell you what it's not. It's not one really good employment reading, which is what we got in March. We got close to 1 million jobs in March and a very strong labor market reading. And I was just suggesting that we'd want to see more like that. We're 8.5 million jobs below where we were in February of 2020, and that doesn't account for growth in the labor force and growth in the economy, the trend we were on. So we're a long way from our goals. And we don't have to get all the way to our goals to taper asset purchases. We just need to make substantial further progress. It's going to take some time. On largely, there are a bunch of factors. I was really thinking, we were thinking of the base effects and also the energy effects. I wasn't meaning to say there are some real effects. I mean, there are always relative prices going up and down within inflation. There's a basket for CPI or PCE. There are, many factors that go into it. Relative prices are always moving up and down. We think it's very fair to say that the increases we see and frankly are about to see later this week are largely due to base effects. It would have been more contentious to say entirely due to base effects because there are some things that are always going up, and so
darn, missed it. Well, I tried.
Hi, Chair Powell. Thanks for taking our questions. Over the past decade, the Fed has invested significant resources in large-scale bank supervision. It has completely overhauled that approach, and it's even created a special committee that horizontally across the largest banks to find common risks. Did the Fed not see that multiple banks had large exposures to Archegos? If not, why not? And then what regulatory changes would you like to see implemented to change that going forward?
Okay, so I think I should take a break here.
Supervise banks to make sure that they have risk management systems in place so that they can spot these things. We don't manage their companies for them or try to manage individual risks. In the grand scheme of these large institutions, the Archegos risks were not systemically important or were not of the size that they would have really created trouble for any of those institutions. What was troubling, though, was that this could happen in a business for a number of firms that is thought to carry relatively well understood risks. The prime brokerage business is a well understood business, and so it was surprising that a number of them would have had this, and it was essentially, I believe, the fact that they had the same big risk position on with a number of firms, and they weren't some of the firms were not aware that there were other firms that had those things. I wouldn't say it's in any way an indictment of our supervision of these firms. In some cases, it seems as though there were risk management breakdowns at some of the firms, not all of them, and that's what we're looking into.
Thank you. Nancy Marshall-Genzer.
It really feels like he prepared a lot more for this meeting. Don't you think?
Are you planning to visit the homeless encampment that's near the Fed in Washington that you drive by? Have you been invited? And
that's a thing?
What would you be looking to learn there?
I haven't heard about that.
Frankly, yes, I have not had a chance to do it yet.
Does the inflation live there?
I will visit. I don't want to visit at a time of a lot of media attention because I don't want that to be part of the story. But I will go visit when it's no longer a news story. And I've met with homeless people many times, a number of times anyway, let's say, and I think it's always good to talk to people and hear what's going on in their lives. What you find out is they're you. They're I mean, these are people who, in many cases, had jobs and they have lives and they've just found themselves in this place. It's a difficult problem, though. There are many facets of it, and I'm well aware that this is not something that the Fed has all the tools for or anything like that. But
let's be honest, guys. The reason that the inflation is homeless is because of you, J. Powell. I shouldn't joke about being homeless, though. Oh, I'm sorry. I apologize. It was out of line.
Not really. I mean, I think I know what I'll find there. I think you connect with these people and what again.
Oh, you think you know what you'll find there?
Yeah, that could be you. I mean, that could be your sister. That could be your kid. You always feel that way in that sort of an encounter, and it just is. It's an important thing to engage in, I think, and I think we bring that understanding into our lives and frankly into our work, the work that we do as well.
Thank you. Hannah Lynn.
Hi, I wanted to
to ask about digital currency. You've previously said a few times that you think it's important for the U.S. to get a central bank digital currency right.
Let's pull the Bitcoin up here.
With countries like China moving very quickly on CBDC, I was wondering what you think the risks are of moving too slow on digital currency.
Right. So I think the first thing to say is that we feel an obligation to understand the technology and all of the policy issues very, very well. Central bank digital currencies are now possible, and we're going to see some of them around the world. And we need to understand whether that's something that would be a good thing for the people that we serve. How would it work in our system? And there's some very, very difficult questions to answer, but I think we are engaged in a serious program to understand both the technology and the policy issues. I would say this: we're the world's reserve currency, and that means that the dollar is used in transactions all around the world far more than any other currency, and that's because of our rule of law, our democratic institutions, which are the best in the world, our economy, our industrious people, all the things that make the United States the United States. That's why we're the reserve currency. And of course, we have open capital accounts, which is essential if you're going to be the reserve currency. So those are the factors that make us the reserve currency.
Well put, Mr. Powell.
That someone,
well put,
another country might have a digital currency. First, ask yourself the question: does that mean that if you were a company that's doing international business, would you then suddenly start to use that currency to do your international transactions, or would you still do them in dollars, which is what everyone does? And I'm not so concerned about that. I am really concerned about getting it right. It is a tricky.
I am falling in love with this man right now.
In a world where we all
this is the best answer he's ever given to anything.
We have FedNow and other immediately available funds. Pretty soon, everybody will be able to do what people do in other parts of the world, which is just use their phone to make immediately available payments all the time. It'll be normal. And what would be the role of a central bank digital currency in that kind of an environment? Far more important to get it right than it is to do it fast or feel that we need to rush to reach conclusions because other countries are moving ahead. I mean, the currency that's being used in China is not one that would work here. It's one that really allows the government to see every payment it's used for which it is used in real time. It's much more to do with things that are happening within their own financial system than it is, I think, to do with the global, sort of global competition.
That was such a good response. They're not going to use the Chinese digital dollar because it's China. The reason they use the dollar is because of our institutions. So let's take our time and do it correctly. Awesome answer.
So I wondered, if that was something that you saw as consistent with.
Freaking finally.
Is that something that worries you, or do you see that as maybe the success of the Fed's new inflation framework, making it out to the broader public?
Right. So, inflation and expectations before the pandemic hit, and here we think of survey, market-based, survey being either households or economists and market-based. You look at all of those, and I would say that they were at the low end of what would have been consistent with a 2% inflation target, particularly our 2% inflation target, which calls for 2% average inflation.
Imagine, quote unquote, very uncomfortable with Biden's $1 trillion plans.
Beginning of the pandemic, and now they've just moved back.
Tweet zero hedge
broadly, that are where they were in 2018 or in some cases 2014, and I would say more consistent with our mandate, and we want them to be. We want them to be higher, and on a persistent basis. We want inflation to run a little bit higher than it has been running for the last quarter of a century. We want it to average 2%, not 1.7%.
Cool.
And for that, we need to see inflation.
Well, that last one wasn't a good trade.
Really well anchored at 2%.
Even though I got it out.
I don't really see that yet, but I would say that break.
So let's mark that one as a mistake.
Break evens are based on CPI, of course, but they're now at levels that are pretty close to mandate consistent, whereas before they were below. We monitor inflation expectations very, very carefully.
Breaking from the New York Times, the Kuma nursing home scandal and cover-up was worse than known.
That's where I would say it is.
No.
Just one small follow-up. Do you have any red lines on inflation readings where if, you hit like a certain number on, say, core PC, that would be, a trigger response from the Fed?
It doesn't work that way. Inflation measures are always going to be a bit volatile.
It doesn't work that way, guys. So if we get 2% month over month core consumer price inflation, we won't be concerned, right?
And we expect that to go away. We also expect these bottleneck effects.
The older I get, the more I hate the word mandate.
Persistent they'll be. We think they'll. It's a matter of when they will pass through, not whether.
It's an interesting comment, Uzi. I understand what you're saying.
They don't seem especially large at the moment, but we don't know.
I like that comment because that reveals to me insight that I'm not seeing everywhere else.
A year ago.
That's not a thought that you stole from somebody else. At least I haven't heard it before.
Policy and a great deal of help from vaccination.
Ian Shepardson says bottlenecks are the new transitory.
And what's happening is demand can be spurred with fiscal transfers and the saved up fiscal transfers and people going back to work and things like that. The supply side will take a little bit of time to adapt. New restaurants will have to be opened. The supply of various inputs into the goods part of the economy will have to be brought back up to speed. And you're seeing some of that. That'll happen over a period of time. Over coming quarters, you'll see some of the bottlenecks resolved, but the last one may not be resolved for some time.
Thank you.
Thank you. Brian Chung.
Brian Chung with Yahoo. Hi, Chairman Powell. Brian Chung with Yahoo Finance. I wanted to ask about financial stability, which is a part of the Fed's reaction function here. It seems like to people on the outside who might not follow finance daily, they're paying attention to things like GameStop, now Dogecoin. And it seems like there's interesting reach for yield in this market, to some extent also Archegos. So does the Fed see a relationship between low rates and easy policy to those things? And is there a financial stability concern from the Fed's perspective at this time?
Right. So we look at financial stability for us is really, we have a broad framework. So we don't just jump from one thing to another. I know many people just look at asset prices and they look at some of the things that are going on in the equity markets, which I think do reflect.
Every time I hear Yahoo, I'm surprised that companies still exist, right?
Framework for financial
Hey, Lucas, how are you?
So we can.
It's been a few days.
The same way each time.
I'm doing okay.
Be held accountable for it.
Actually, my E-mini position is underwater now. Maybe I should bail on that. Yeah.
Things in the capital markets that.
Wait, where's my stop? Oh, I should have hit my stop already. Okay, well, let's just puke.
With monetary policy, but also it has a tremendous amount to do with vaccination and reopening of the economy. That's really what has been moving markets a lot in the last few months. Is this turn away from what was a pretty dark winter to now a much faster vaccination process and a faster reopening. So that's part of what's going on. The other things, though, leverage in the financial system is not a problem. That was one of the four pillars. Asset prices was one. Leverage in the financial system is not an issue. We have very well capitalized large banks. We have funding risks for our largest financial institutions are also very low. We do have some funding risk issues around money market funds, but I would say they're not systemic right now. And the household sector is actually in pretty good shape. It was in a very good shape.
Well, that's super disappointing.
Financial crisis, the pandemic crisis hit. There were real concerns, of course, with high levels of unemployment and loss of wages and all that the household sector would weaken dramatically. That hasn't happened. So with the fiscal transfers, money that's on household balance sheets.
How some things in equities do reflect froth in markets, and they just sold off on that.
The financial stability picture is mixed, but on balance, it's manageable, I would say, and
it's manageable.
For financial conditions to remain.
You heard that, guys? Party's still on. Buy all the things.
8.5 million people who had jobs don't have them now. And, there's a long way to go till we reach.
Puke 2x. So I should. No, I don't want to reverse on that. You buy it. Come on.
market pressures, the Fed didn't
I don't know.
changes to interest on reserves or
I should have been paying attention, shouldn't I?
behind that. It seems like SOFR has been drifting closer to zero. So just hoping for clarification.
It's paying a little bit more attention to my treasury trade, even though probably shouldn't have.
Well within target.
Oops.
Target range and money market funds, money market conditions are fine. We have
That's okay.
to use our administrative tools to make sure that that remains the case. We do expect further downward pressure on rates through asset purchases and also the runoff.
My eyes were over here, not here. I can't manage two at a time. That's okay.
See a need to deploy our tools to support rates, and of course.
So I should say though, Lucas. I mean, I've made some mistakes, but I've been just trying to take one tick, and I'm getting it almost 70% of the time.
Hi, Chair Powell. I wanted to ask a similar question. We're seeing elevated market valuations, and some economists are concerned that the economy might overheat, at least for a period of time. So should the Fed and other regulators be thinking about tightening capital requirements or extending oversight to
70%.
so that
75% technically. And this isn't the first day that I've done it too.
So I think capital requirements for banks.
Uzi says, told you it was possible.
It went up.
Good. It's about the minimum you need for the strategy to work. Any less than that, and it's not worth it.
Of the pandemic, and the banks.
Yeah, but it's fun.
A real stress test, very well, and
I could try for 2 ticks instead of 1, but
stress tests, and then there's another one pending.
You just don't get the volume in the treasuries these days for that, you know.
Capital is in a good place as far as I'm concerned in the banking system, but to your point,
is it so totally?
So what kind of happened during the pandemic crisis that requires attention? And number one is
yeah. Once I started reading between the lines, I kind of figured it out, and I was like, oh no, duh. We can totally do this.
We're looking at ways
now. How somebody does it in the E-mini, I'm still a little unsure, but
those vehicles.
I was even utilizing it a little bit. I was kind of watching the NQ and the YM here, and was like, oh, well, these didn't reset.
Market conditions. It's a private business. They need to have the wherewithal to stay in business and not just count on the Fed and others.
Stock slammed as Pal drops the F word.
The other one is treasury market structure. Dealers are committing less capital to that activity now than they.
I have to say, when it's working, it's great. I sure feel like you're walking a tightrope, you know?
Treasuries.
It feels like a real tightrope.
There are some questions about treasury market structure, and there's a lot of careful work.
I'm going to have to practice this one-tick trade for a really long time before I'm going to feel confident executing it live, because it just feels like if you're even a little bit off on what's going on, you can just completely lose it quickly, you know?
Well, for the good of our economy and the good of our citizens. So
it's even more fun on NQ.
It's not clear where that.
Well, I got another one right there, so that's good.
Taking a careful look, and the Treasury Department is really going to be leading this at Treasury market structure and all of the various aspects of that to make sure that we do have a resilient, strong Treasury market that can work even in difficult times. As you know, at the very beginning of the of this recent crisis, there was such a demand for selling.
It's an endurance strategy for sure,
including by foreign central banks. That
I think it makes sense. After he's done talking, we'll talk about it.
What was happening was the market was really starting to lose funds.
Very scalable.
Really serious problem, which we had to solve through really massive asset purchases. And so we'd like to see if there isn't something we can do to. Do we need to build against that kind of an extreme tailwind? So what would that look like?
Thank you. Edward Lawrence.
Thank you, Fed Chairman, for the question. So I'm interested in your thoughts. There's so much fiscal help and accommodation from the Federal Reserve. You said today that vaccinations will follow the normal economic conditions or lead to more normal economic conditions later this year. When do you see the economy being able to stand on its own feet, so to speak? And along those lines, with the fiscal spending and the accommodation you talked about with transitory inflation, does more spending need to be injected into the system, or will that affect that transitory nature of the inflation? Thank you.
When will the economy be able to stand on its own feet? I'm not sure what the exact nature of that question is.
Well, what I'm saying is when do you need to lower the amount of treasuries you're buying, sort of taper off a little bit? When can it stand without having that support from the monetary policy side?
Jay Powell's like, Edward, are you trying to crash the market?
We articulated our test for that, as you know, and that is just we'll continue asset purchases at this pace until we see substantial further progress. And we're going to communicate well in advance of any decision. We're going to let the public know that that's what we're thinking, and so there'll be a lot of warning and that kind of thing. But it's about substantial further progress toward our goals. That's really all it is. It doesn't have any external virus-related specific requirement. Although again, I do think the virus will need to continue to be controlled for us to achieve those economic goals. But it's really the economic goals. Now, your second question, sorry, just say again, I didn't quite get the question.
Yeah, sure. With all the fiscal spending that's happened in the accommodation in it, does the system need more spending, either from the fiscal side or accommodation, or would more spending affect the transitory nature of the inflation and put those upward pressures on inflation long term?
So it's really up to Congress. We're not an advisor to Congress. We don't weigh in on specific fiscal bills or proposals. That's really between elected parties. Basically fiscal policy is the province of people who stand for democratic election and win, and they get to make those very decisions, and they get to be accountable to the voters. We didn't do any of that, and we don't have a seat at that table. We don't seek a seat at that table. So that's really something for Congress and the administration to deal with.
Thank you. Greg Robb.
Hi, Greg Robb from MarketWatch. Thank you so much for the opportunity.
Well, I'm not too happy with how that fill went.
The housing market, it's just kind of confusing, the question and your answer. The housing market is strong, prices are up, and yet the Fed is buying $40 billion per month in mortgage-related assets. Why is that? And are those purchases playing a role at all in pushing up prices? Thank you.
I mean, we started buying MBS because the mortgage-backed security market was really experiencing severe dysfunction, and we've sort of articulated what our exit path is from that. It's not meant to provide direct assistance to the housing market. That was never the intent. It was really just to keep that it's a very close relation to the Treasury market. And
almost gave up on that one.
And so that's why we bought, as we did during the global financial crisis, we bought MBS too. Again, not an intention to send help to the housing market, which was really not a problem this time at all. So, it's a situation where we will taper asset purchases when the time comes to do that, and those purchases will come to zero over time, and that time is not yet.
Thank you.
Thank you. And for the last question, we'll go to Mike McKee.
Thank you, Mr. Chairman. Since I am last, let me go back to Paul's question, the first question, and ask you whether, not whether you're thinking of tapering, but why you're not. We're seeing bank lending fall. The markets seem to be operating well. Are you afraid of a taper tantrum, or is it, as one money manager put it, if you get out of the markets, there aren't enough buyers for all of the Treasury debt, and so rates would have to go way up? Bottom line question is, what do we get for $120 billion a month that we couldn't get for less?
It's really not more complicated than this. We articulated the substantial further progress test.
Should have scratched that one.
And really, for the next couple of months, we're made relatively little progress toward our goals. And remember, substantial further progress from our December meeting. And then vaccination started to get more widespread. The economy reopened.
Yeah, like it should come up. It should stack. They should start hitting into it. They didn't. I should have scratched it.
Not close to substantial further progress. We're hopeful.
Should have moved it down right then and there.
Along this path, away to that goal, and we believe we will. Just as a question of when. And so when the time comes for us to talking about it, we'll do that. But that time is not now. We're not that far. We've had one great jobs report. It's not enough. We're going to act on
It's one great jobs report. It's not enough.
And we're just going to need to see more data. It's no more complicated than that.
Well, listen, Friday's another day, right?
Doesn't change anything, but does it change anything if you actually tapered a bit? If you spent less, would you still get the same effect on the economy?
If we bought less, you're very faint. So if someone has a volume, they turn it up. But if we bought less, no. I mean, I think the effect is proportional to the amount we buy. It's really part of overall accommodative financial conditions. We have tried to create accommodative financial conditions to support economic activity, and we did that. And we articulated the tests for withdrawing that accommodation. And we think. So we're waiting to see those tests to be fulfilled, both for asset purchases and for lift off of rates. And when the tests are fulfilled, we'll go ahead as we've done.
Well, I'm a little surprised that the 10-year is as comfortable at 0.35 as it is, but
we'll do it.
That's okay.
If those tests are satisfied, we'll do it. And the only thing that will guide us are the tests met? That's what we focused on, is have the macroeconomic conditions that we've articulated, have they been realized? That will be the test for tapering asset purchases and for raising interest rates.
Thank you very much.
Okay, gotta mute that before the music comes on. Now mute this over here. This event has now ended. So I took that, let's see here, how many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 times, and I lost 4. So 14 out of 18. I think that's still 75%, right? Yeah, 77. Although it's that last one, could have scratched it. Actually, a couple of these that were bad, I could have scratched it. But there was plenty of them that were good that I thought about scratching it too. So, I don't know. How do I know that I should scratch it? Still a little difficult. So what was I going to say? Oh yeah, I don't know if Lucas is still there, and I don't know if Uzi knows how I'm doing it or not. But one of the things that I think I need to start focusing on for the education part is the larger game. And we've talked about this before, but I feel like I have a much more convincing argument, I guess, right? So the larger game is the metagame, right? So what do we know about the metagame, right? Well, we know there's you can scalp, you can do market making, you can do arbitrage, you can try to find behavioral inefficiencies, you can try and trade off of news, you can try and trade off of risk. There's all of this array of strategies that you can do. Okay, well, because we want to trade futures and we want to limit our risk overall, that kind of limits the field a lot, for sure, right? But what is the metagame? Well, the metagame right now is that robots are OP. That's what it is. Robots are OP. So everything is adjusting for the robots being OP. The market making style, even though I can get it to work over here, I think there's some real problems with it when you factor in the robots and your position in the queue and fat tail events, essentially. So there's some issues with the risk taking on that side. So then you get into the game that most retail players play, which is trying to find some sort of statistical aberration in price movement to take advantage of. And I've spent a lot of time investigating those kinds of inefficiencies. And while I've found some things, they tend not to last for very long. And they're really small, and it's a heck of a lot of work. And they still have the kind of the fat tail problem, right? So you got all of these people trying to play this one class that it frankly isn't that good. You know what I mean? So what other options do you have? Well, one option that I've been using that has worked really well for me is news. There's not as many retail traders really trying to understand the news. Futures are really well suited for trading that. We can make money off of news. The problem with news is you don't get a good news move every day. Not anymore. There were times with Donald Trump when it seemed like it was like that, but you're probably going to need something to supplement you, right? Which kind of brings me to arbitrage. Because when I come into arbitrage, I can find situations where, from our performance at least, and I'm not even saying that I feel particularly great at it, but we are finding locations where we have a better, what is the right phrasing for this? We have equal risk reward, but we're winning more than we're losing, right? It's a truly predictive signal. It's a super small one, only like one tick. And part of the edge there is being able to find the right spot in the book and everything. But it is a truly predictive edge, right? And hardly anybody's looking at this stuff. And it doesn't rely upon using past price to predict the future. It's only using current prices relative to each other. There's a lot of programming and so forth that we can do with that. So the more that I dive into it, the more I'm finding that there's a lot of research about pairs and stuff like that. And I think that from a discretionary perspective, knowing which things are going which way and what might be undervalued as a result of that and everything, I think that you can sort out an edge there that the robots aren't catching and that the retail traders are clueless about. You know what I mean? So that's kind of my play, as what I'm thinking is like, play the bigger game, play the meta game. When you play the meta game, I don't think that it makes sense to try and trade technical analysis. It just doesn't. Even if you can find an edge in there, there's too much work and the edge is small and it disappears. You know what I mean? But like I said, it does feel like a tightrope, man. It's like, I feel like I could go on a bender with this so easily. But maybe one of the advantages is you can really practice it so that you don't do that, right? Oh, are you guys still there? I didn't lose my... Oh, here I am. Yeah, it looks like my thing stopped sending requests. Oh, I had to mute for a second. Yeah. So that's what I'm thinking. That's why I've been doing it. I don't know how much you know about how I'm doing it, but I'm trying to arbitrage. I'm looking at spots where I think that relative to other assets that the price is incorrect and trying to take it for a tick. Seems to work. At least I've been able to do it 2 days. I'm awfully tempted though. Can you see there are sometimes where I'm awfully tempted to be like, oh yeah, but it's still going to go back up there. Let's add a bunch of contracts and like sort it all out and make it out and add risk to it to make it work. How did I get into that habit? That's bad. We need to stop doing that. There's that sell again. Well, you know what, guys? I'm not going to stay around till the close. Yeah, pretty quiet anyways. 9 likes. Thank you guys very much. Well, I thought it was a really good press conference. I feel like that Chairman Powell was way more prepared on that. How do you say? He was way more prepared for that press conference than in past press conferences. He had a bunch of stuff written down and he just read it off of the piece of paper, which is fine. But like, I hadn't seen him do that in previous press conferences. He was waiting for them to ask. He knew what they were going to ask. He was waiting for it. He had good answers for it. I don't think that anybody is convinced on this whole, like, we don't need to taper. I think that what's going to happen is we're going to have another 1 or 2 really good jobs report next week. I'm sure that jobs report is going to be good. Like, the early indications seem to be suggesting that we're going to get another 1 million jobs report, like 1 million jobs added. Like, it's crazy. We're like, there's going to be a certain point at which they're going to have to, at the very least, withdraw their support from the treasuries and make the interest rates go up. Like, that's the real issue. And I think that people are really concerned that it wouldn't take very much of a rise in interest rates for the market to just fall apart, you know? But I don't think that he's doing it because, oh, we need to keep asset prices up or, you know, they won't be able to buy. I think that he really is telling the truth when he says we need to meet our economic objectives first. The issue is just that I feel like that by the time you meet your economic objectives, like, you're too late, right? You're behind the curve at that point. But they ain't going to change their mind, so no point in arguing with him about it, is there? Huh? Okay, guys. So I'm going to get going. Tomorrow's another day. We'll see. We can work it out. The other problem with this treasury trade, by the way, it's not very many opportunities. Like, when we got an FOMC day like today and it's moving around, then I was able to work it out, right? If we got news going through, I can pull it out. But otherwise, there's not enough volume coming through for it to work. So, okay. Anyways, stay profitable, friends.